Time now for some squawk picks, and retail earnings are on deck this week. We've got Target, Walmart, Estee Lauder, just a few of the big names reporting quarterly results. Let's bring in Oliver Chen, TD Cowen's managing director and senior analyst. Oliver, good morning to you.
Great being here with you.
Where do we start? I mean, in a way, Estee Lauder might grab my attention there with everything that may is going on in China or not. Are they on your coverage list?
They are, yeah.
I mean, what do you think about?
We're cautious in the earnings. We think guidance could be lower. There was a cybersecurity incident. That's something to watch. But the big focus here, two regions, Hainan and Korea, those have been a lot weaker than expected. They've been losing some share to other luxury companies. We like Estee Lauder for the long term.
Let me stop you there. So is Hainan a region in China?
Yes.
Okay, to make sure we're on the same page. So if Estee Lauder's losing share, in a way I don't care as much. I feel bad for them, but it doesn't, get my macro, whatever going. But if they're doing poorly because the Chinese consumer is under pressure, so which of the two is it, do you think, or a little both?
They're losing share to other luxury players, such as fashion, handbags, footwear. That's what's happening in the near term, because you could get beauty products during the depths of the pandemic. So it's been a little problematic there, and the guidance has been too aggressive. That's something to watch. The Chinese consumer overall, it's been mixed, but we're optimistic. What we're seeing in luxury goods is a slightly weaker U.S., strong European tourism, and an Asian customer who's holding up. APAC numbers have been generally strong. Estee Lauder is a unique case.
Well, okay, our Eunice Yoon, who's wonderful. So we were talking to her on Friday about this, and I said some of the companies lately are talking about a little bit better, sort of consumer. I think Wyndham, for instance, was on our show saying that recent weeks had turned better. And she said, Eunice said, she's in Beijing, she said, I'm surprised to hear that anybody would say the consumer is doing better, because that is not the impression that she's getting or that it seems that the country is giving off right now. Yeah,
in China, there may or may not be a stimulus. That would be a nice positive. Also, youth unemployment's fairly high. So we're watching that. Well, the good thing is there's likely no more lockdowns, given what you're saying in these cautionary aspects. But luxury trends long term, it is all about China, that emerging middle class.
Yeah. So Target, Walmart, I don't mean to overlook them. Walmart just feels like, okay, well, we know the story. It seems like they've been able to gain share, the grocery business, whether or not they can put back great numbers, who knows. Target, a little bit more tricky. They're more discretionary. They, had some issues in June. What do you think about going into this week? Like, what stocks do you think are best positioned?
Yeah, Kelly, you're bringing up great points in terms of what we like into this week. It's Walmart. Target's been a lot more under pressure. We think the gross margin estimates are too high. Also, we're looking for a slightly negative comp at negative 2.2, a positive comp at Walmart at plus 4. So what's happening really is Walmart has about 60% grocery exposure. That adds a lot more stability. The consumer discretionary trends have been negative, and that's been a big issue. Consumer still has money, but the consumer is being very choiceful and contemplative. Keep in mind, the labor market's tight, which is a positive. Also, nominal wage growth is growing above inflation. That's a positive. However, travel is taking share as well as inflation, and that's negatively impacting parts of Target, like home, apparel, discretionary.
That's what I can't tell, and this was a little bit what Joe and everyone was talking about a little while ago. But so when we say that the consumer, that discretionary is under pressure and they're being a little choicey, we seem to get a different read because this is more of the goods-facing part of the economy than we would if it were, I don't know, still the airlines or the ticket vendors or those kinds of players. So is it just a rotation, or is there a broader kind of softening going on?
It is a rotation in terms of what's happening, because there's $860 billion of savings on the sidelines. And what's happening is normalization, where the consumer is going back to pre-pandemic tendencies. But what we're seeing is a consumer using money for inflationary goods such as home essentials and beauty, and also the consumer traveling again. So there's lots of spending power, and the labor market is tight. That's evidence. However, the shifts have had to happen very rapidly in terms of the product assortments. Fortunately, on average, inventories are running 15% below sales. That's a positive, too, in terms of changing inventories as quickly as possible. But our picks are the top share leaders, Walmart, Costco, as well as LVMH. Keep in mind, Walmart's also getting a higher income customer. Based on our survey, about 9% growth at over 100K.
Wow.
Is the controversy over for Target? I mean, the stock price, you don't attribute any of that to woke and broke?
We're watching it. What's happening is it's a very diversified product line, but Target has bigger issues in terms of consumer demand. All these discretionary categories.
How much of there's Target? You can't tell me that some of that's not. You go.
Well,
woke,
we
broke.
We had issues, Joe, before.
I know you had inventory issues. They messed up on what they had on the shelves. Budweiser hasn't had any issues. Oliver Disney hasn't had any issues with those things.
Well, Target is a very diversified product assortment, and curbside pickup, e-commerce, the whole omni experience, as well as
they've had a lot of screw ups other than the.
But
the
all
apparel.
of retail's had issues in terms of these issues. Shrink's another problem too. Student loans are another problem too. So we're really looking at across a lot of cautionary issues, in addition to thinking about inclusivity, diversity, and thinking about the new younger customer too.
It's a pretty big gap. Like it's like a 50-point gap.
Yeah, I mean,
since last,
what we're really seeing is own the share leaders.
August.
Walmart's the #1 grocer.
There's nothing
Costco.
there. Nothing there. What we're talking about.
Well,
nothing there is,
part
is
of the
from that
issue
situation.
is there's such a high correlation to earnings and stock prices, and Target's
There's a big correlation to earnings. There's a bigger correlation to earnings to sales. And if you've got 30% of the population won't go to Target anymore, then it's.
Oh, well, based on our data, Target, the traffic is positive. It's positive at both Walmart and Target. And keep in mind, this is the year of returning to the store. It's also not a mono brand. There are hundreds of thousands of products within Target. But Target does stand for inclusivity. They think about that in a modern way. It matters for employees, and the labor market is tight.